Good morning, traders, and welcome to the daily call today, Thursday, the 31st of October. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what's happened in yesterday's markets. We'll start off from the US. We saw the private sector employment change coming on forecast at 125,000 jobs. The GDP was 1.9%, slightly higher than the forecast. The big event to take place from the US was, of course, the rate decision, the interest rates decision, and of course the accompanying statement from the FOMC. Well, the Federal Reserve cut its rates by 25 basis points overnight. This makes it a third consecutive interest rate cut, and the overall message from the statement was quite hawkish compared to the last two meetings, setting a higher bar for further cuts in the future. So that was what happened overnight. The US dollar did get a boost from that data. As we lead into non-farm payrolls, which happens tonight. Okay, from Canada, the Canadian dollar was probably the biggest mover overnight. The interest rates did not change. The Bank of Canada kept interest rates the same at 1.75%. The message from the bank was slightly mixed. The central bank said that the resilience of Canada's economy will be increasingly tested. They saw the outlook weakening since July, since the last meets, with trade conflicts likely to cause business investments and exports to shrink in the second half of the year. So overall, the message was not great. It was more doom and gloom rather than a hawkish message. Consequently, the Canadian dollar weakened against most currencies, with our own Aussie dollar CAD pairing jumping around about 100 pips at the news release. That was what happened there. And then finally, locally, we had our CPI number coming at 0.5% on forecast, and the mean CPI, the trimmed mean CPI at 0.4%, which was on forecast as well. Overall, Aussie dollar did have an okay day yesterday and made ground against most currencies. Alright, that's what the data from yesterday. Let us now have a look at our chart of the day. Incidentally, the chart of the day that I found yesterday, I did zoom in onto a 4-hour chart to try and find something for us. We did trigger and we have been stopped out. I'm trying to remember what it was. I think it was the Aussie Kiwi. Just go back and watch yesterday's class. It was a 4-hour chart. We have been stopped out on that one. Okay, I've got nothing open at the moment, so let me see what I found this morning. We have the Aussie US on a daily timescale. Now, we're not quite there yet. It did take me quite a long time to find the chart this morning. This was the one that caught my eye the most. It was the most interesting one. It's a really nice fall in market. There's a nice level of resistance. I've highlighted it here with these arrows. The market has come to this level once, twice, three, four, and we are approaching it again for a fifth time. I've marked out the hot zone. What I would like to see is some kind of price action reversal to occur in that hot zone on that resistance line, and then that will be the confirmation for us to take this trade. At the moment, we are not set yet. Add it to your watch list. Aussie US dollar daily timescale is our chart of the day this morning. Alright, what's on the agenda for the session which is about to kick off? We have at 11 o'clock from New Zealand the ANZ Business Confidence number. 11:30 locally, our building approvals number is due out. Tentatively throughout the day from Japan, they will be releasing their monetary policy statement. And then finally at 11:30 this evening from Canada, we are due to get the GDP numbers be released. That pretty much wraps up the session. Guys, as always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you'll have a fantastic trading day. I'll talk to you tomorrow for the Daily Call. Bye for now.